Welcome to TradeTheMBI.com. This is Jonas Reporters for the 3rd of October. Well, we're fluctuating right around that ABM yellow, having a hard time staying too much above it, and that's obviously the weakness there. The only thing that's been keeping things relative for support has been that rising gold from the shakeout, and it's keeping us above the ABM green. Of course, I say below ABM yellow, you can be more in a short position. Definitely a break of the ABM green, and I would expect that we're going to see a bit more fill back into the little pop-up that we've had. And of course, it's just world tensions, and if things escalate, obviously it'll get worse. But if there's some kind of saving grace in it, then things will moderate. It's not that major an effect right now, simply because they know that the Fed and everybody is doing their best part to, fuel things prior to the election, and it's just the way things are at this particular stage, given an election year. And you can see from the Nasdaq that strong rising gold. However, you've gone through this whole up move without really much of a move, and so that's problematic from a bull standpoint. And you can see we could be getting an MBI white over magenta on a daily, and that is never a positive sign. So take that for what it is, and clearly right happening at previous algo levels, so that could be problematic as well. It's just a matter of following intraday. When we look at it from a DOC standpoint, we've been in a DOC spread since the peak, where we had the rejection of cyan to green, and those are always key points. Never changes. Moving to treasuries, of course, yield having to increase. Nobody wants them at the prices that they are, which is counter to what the Fed did. And that's what's going to end up happening. The real market rate is going to force rates higher, simply because there's no other justification to be in them. It's already forced money into equities as well as into commodities. The pushback of oil off of its significant drain in supplies, and that, especially heading into winter, is an interesting configuration. And then, of course, you had the hurricane. Now you have the port strike. A lot of problems there, and that could propel oil pretty fast, particularly if you have more heightened tensions in the Middle East. And we haven't seen the Israeli response yet. So if that takes place, then all bets are off on how high some of these things can move. And of course, that corresponding move in oil is direct inverse here for the euro as it fades, and then because they're going to have to exchange more dollars. It's just that simple. Not to mention the euro economy isn't doing anything spectacular. But from a gold standpoint, maintaining up at its highs, and it's going to continue to do so, even in slight weakness here. Still isn't a strong presence, but we're just about to have cyan taking over red at this particular stage. So I wouldn't expect much of a fade back in it, but you're going to get some cross play with a lot of these different ones, and that's just because of the rotation that's going to take place within them. Bitcoin and that also having suffered a lot, and I think a lot of that was liquidations moving back and forth, because if the market is moving, you're definitely going to want to switch out to the assets that are making the biggest moves. And at this particular case, from a Bitcoin standpoint right now, still a little bit in the weak side here, though the run may be pretty well ending. Shakeout softening, but again, it had the rising gold too, keeping it right at that 50% marker. Not horrible, I wouldn't call it great. It's even been weaker a little bit from an ETH standpoint. And also potentially facing that MBI weight moving over magenta. So you're seeing broad weakness, except for in, commodity sector of, oil and gold at this particular stage. And that's just because of where spending is at. And, you ease tensions off, and obviously everyone goes back into the market, and, you're going to run into new highs. And it's still not out of the question. From M50K, you can see that declining move, and it's all been because of these MBI white spikes as we've seen them come through. And it's pretty clear when they make the move, and then it just turns around, rolls back down. A little bit of a hoarse throat. Been going around here in Italy. Intraday, everything happened in the pre-market from the dip, and then it was just solid buy from there. And then all we did was retrace to the 50%. Not even really any positive extremes or anything. So it's all pretty much even, smooth action. Pre-market here, we're getting some sell-off right here in the latest phase of things. It's all going to be geopolitical, maneuverings and how things go within that conflict stage. And if that smooths out, then I would expect a strong bounce to the upside. But if not, I think that you're going to continue to see people wanting to stay on the sidelines or move to cash situations. So that's the long and the short of it for now. And it's just a matter of following the readings. It's been all pretty clear. 5 minute 50K on that. So all good. Have a good one. Anything relevant, I put it on our Skype chat. Have a good one. Trade well.